Good morning, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host another Red Cloud webinar on uranium today. So we are going to hear from GoviEx Uranium CEO Daniel Major. During today's webinar, he will provide an overview and outlook, and then we will take some questions, and we'll get to as many questions as we can. Please type them into the chat box. But before we kick things off, first we need to discuss the fine print. Now, during this GoviEx webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of its corporate presentation. That can be found on the company's website, goviex.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research outlined on the Red Cloud website for specific disclosures on GoviEx Uranium. Now with that, I turn it over to Daniel to update the audience on GoviEx. Daniel.
Thank you very much, David. I thought I would provide a little bit of an upfront for a change. I gave a presentation recently at the London Indaba, but I thought it would be worth just reminding ourselves why we're actually in this industry. And then I'll go into the company specific stuff as well and provide an update. And I'm sure a lot of the stuff will be related to that from a questions point of view. As you said, the forward-looking statement disclaimers on page 2, which can be found on our website. Let's just kind of reset as well. I think it's important to kind of remind why we're here. This is all about why we need clean energy. We are a world that's facing a requirement for clean energy. We have an increasing demand for fossil fuels going on at the moment. And in fact, coal demand this year will be the highest it ever has been and continues to rise. We definitely have got complications, particularly in the uranium industry as a result of Russia's invasion of the Ukraine. We got a continual global push out there on sustainability and environmental issues and a push for green energy. And I think what's interesting on that climate survey as well is that development of renewable clean energies and diversity of supply are the two main drivers. It's not just about consumption. It's all about where am I going to get my power from and how do I make it clean? And that's really where nuclear fits in. It is clearly a winner out there on the demand side and the supply side and where it goes to. We're showing a very strong commitment by all governments around the world. Well, the majority of governments. There are a few standouts at the moment. Countries like Australia, Germany, Australia continue to be negative towards nuclear, but the majority of countries have moved towards the nuclear story and are accelerating into it. China continues to be the single largest constructor with a very aggressive builds out there. We're seeing the development of the SMRs starting to come in, with SMRs expected to start going into construction from 2030 onwards. And energy security has become a major part of it. On the supply side, we've got declining older assets. We need new production. We've added geopolitical risk into here. There are restrictions on certain countries' ability to sell to major suppliers. For example, Canadian and Australian material find it quite difficult to get into the Chinese market because of safeguard issues. There is competition out there for that supply to come in, and restrictions on the conversion and the enrichment market continue to pressure pricing and need changes to remove risk on the security side. But why really fundamentally are we seeing this renaissance in nuclear? Well, obviously it's clean. It's actually the second lowest emitter of clean energy. It's one of the safest with a very low rate of accidents relative to its very low efficiency on carbon emissions. But it also uses an incredibly small amount of fuel, as the example there provides. You know, all the energy of an egg is the equivalent of 21 elephants of coal. You know, it has a lot of key benefits towards that. It also has the smallest use of land. For 3 kilometers square of nuclear, you would require 150 kilometers of solar and over 700 kilometers squared of wind. These are real benefits in countries that don't have a lot of land use, where you're trying to fit in with existing populations and the like. It also uses the least amount of commodities. So while we have a lot of discussion out there, copper particularly, looking at, mining as much copper that we've ever mined between now and 2040, why would you go into an energy market that demands more of a commodity than nuclear? It uses very small amounts of copper, aluminium, steel, concrete, relative to its peer group, and particularly in something like concrete, which is incredibly emittive of CO2. There's a lot of talk of critical minerals in the clean energy transition. But, if you're going to go things like wind, that exacerbates the problem. Again, nuclear is very much part of where that clean energy can come from. And again, a reason why we're seeing that. On a levelized cost basis, nuclear is very competitive against its peers, both in solar and wind. And actually, if you look at it as an all-in cost, you can get all of your power from nuclear for about 120 megawatts per hour. If you add the batteries to make it a 24/7 scenario for wind and solar, wind is coming at about $290. Solar is coming at over $400 a megawatt hour on a like-for-like basis across the board 24/7. So again, nuclear very much part of it. It's fully reliable. You're getting it 93% of the time. Coal, you're getting at about 40%, gas 57%, wind's 35% efficiency, and solar's down at 25%. But what we're now starting to see out of the nuclear industry as well is a lot of complementary asset approaches coming through. Centralized heating systems, particularly in Scandinavia. Hydrogen production is a major player now for the nuclear industry to push into. Marine applications. 5% of all the world's emissions come from marine applications, and nuclear is starting to look at that area, and desalination. And as I said, SMRs are now starting to come into forward forecasting from people like the WNA, with a new first production asset starting up and for construction in 2030. And against all of that, we've had uranium supply declining. The secondary side particularly, last year, 38 million pounds of uranium came from the secondary market to balance it. This year, it's forecast at 24 million pounds. By the end of the decade, this number will have dropped to 3 to 4 million pounds. That's equivalent of 2 Cigar Lake mines have got to be found just to replace secondary supply, let alone the decline in older assets as they come through. Cigar Lake, just after the end of the decade, it reaches towards the end of its life. Somaïr mine, while they've extended it, only gets to the end of 2040. And an expansion out of Rossing, which produces 2,000 short tons a year, will only now extend it out to 2036. And even the Kazakh operations, they highlight themselves that post-2030, sharp decline in existing assets, need to bring new ones, but there's no guarantee of new production meeting all the requirements commercially to match up for what they currently produce. And that's really where GoviEx puts itself now, is that focus to grow. We are Africa focused. We are permitted on both of our projects. We have the exploration project. And this is about trying to get ourselves into production. We've got a very large mineral resource with over 200 million pounds in the ground. A lot of exploration upside. We stopped exploring back in 2030, where we felt the focus should actually be on de-risking and converting the pounds we've got into production pounds, not just making our project bigger. That would just add life. Madaouela project, our primary one, it's already gone through feasibility study. We're currently dealing with Endeavour on the debt financing on that, and I'll come back to that in a minute. But it benefits from being where it is. It's up in northern Niger. It's got all the good infrastructure, road, people, power. We've got a very supportive government who, I met with the president in the beginning of July, who reiterated to me his strong position that, they want to do what they can to get Madaouela up and running. They've lost Cominac. Somaïr's life's coming to the end. The town of Arlets and Akakan new production. The feasibility study was out at the end of last year, 2022, September. One thing I would note here is that I've had a lot of suppliers come back to us to highlight that shipping costs, particularly that we're quoting for our capital numbers, have come down considerably. They're off 50% since we quoted on the feasibility study. So I see those efficiencies coming back as we priced everything in May of last year. The NPV and IRR do not represent this project either. This is a 20-year mine life. It produces $83 million of EBITDA a year over those 20 years. It can be extended considerably beyond that period of time. Normally, analysts would value things at 6 to 8 times EBITDA. So that kind of gives you a real sense of where the value of this project is. It is long life, and a lot of the projects that you see out there under development now are relatively small or short life. This is a long life project. You got the Matanga project as well. It's currently in its feasibility study stage at the moment, fully permitted. Again, great infrastructure around our projects, power, roads. We've done a lot of work at the moment, infill drilling on the Dibwe East deposit. I can tell you that that result is looking good. We've seen in grade standing up well and great conversion onto the indicator, and there should be a press release out on that very soon. This one benefits as well from low capital, very low strip ratio, very low acid consumption, and in a country that actually produces sulfuric acid. So in GoviEx's case, we've got these 2 advanced projects. We're already looking at the financing on the Madahuela project. As I've said in other presentations, we went with Endeavour. We got an initial 20 companies come in and indicated they wanted to go to the next stage. We have LOIs for a number of companies already, but we're waiting to close out the full debt capacity. I have indicated in other presentations that really waiting for that last DFI. We had a call with them last week, so hopefully we can close out that position before the end of this month. That would be our target, to be able to tell the market exactly where we are on the debt side. At this moment, I feel confident, but still have to cross the I's and T's to get to where we need to be. So, this is a great project in Niger. Matanga, currently moving forward on that feasibility study. Expect to have it completed about this time next year. Not seeing any major risks on that one at all. A lot of work. ESG, I put this one up. It is a major part of our industry now, not just the uranium industry, but the mining industry in general. You require it for financing of projects, particularly on the debt side. And in fact, when we're talking the export credit agencies and the DFIs, this is an issue they come back to straight away, even on the introductory calls. It also is a big issue for a lot of the off-takers, particularly the European off-takers. None of the European off-takers will sign contracts until they sign you off on an ESG basis, and increasingly becoming an issue in North America as well. We obviously do it for a community basis as well. We have to work with our stakeholders, and hence a couple of our recent announcements that we've put out just highlighting what we are doing to work with our community stakeholders that support them as part of the development of our projects going forward. Strong shareholder base sitting here. We have paid all of our debt off now. We did that last year to the government. We did cash up at the end of last year. We're in a robust position for that at the moment. Moving forward, I can't give you much more breakdown of the shareholders. Most of our shareholders happen to be in the OBO list, so very hard to get hold of them, and it just says the brokerage houses. But the key driver for us, though, is we continue to trade at a massive discount to our peers. I think if we can show that we can get our debt in position, that should be the real reason for a re-rate on this project, our ability to get that. We are a very leveraged stock. We've seen that in the past when the uranium market moves strongly, GoviEx responds strongly. We're in a much stronger position than we were before as well. We have these projects, one through feasibility study, one in that project almost there on its debt side, and then moving to the offtake component. We've been talking to off-takers for a long time, had a really good general response, but we've not committed yet to them. We want to know where the price is going. We want to know what our debt side is looking at before we engage in that process. But people recognize that Africa has got to be part of the forward play from a security of supply perspective, not only from Western countries, particularly from China as well, given my previous comments about their restrictions of where they can go to get future material, and given their very large growth rate on nuclear build-outs, Africa has to be a place that the Chinese consumers come to for future supply. So we love the market. As I said, I really just wanted to put something out there on the nuclear industry in general. It is looking very robust. We are looking at that renaissance. The market continues to strengthen. UXC came out on their weekly and Trade Tech saying, really, look, September, W&A expect a real surge into the market during that sort of September, October period of utilities looking to get into the buying market. So we look forward to that. That ties well with where we're looking to get into the offtake market discussions more aggressively. We have a large resource, a lot of exploration upside on our properties, and we're permitted. That's the key fact. And we're moving towards the next stage on our development. So thank you very much.
Great. Thank you very much, Daniel. Great presentation as always. So we're now going to kick off the Q&A portion of the webinar. And a reminder to everybody online, you can type your questions into the chat box at any time. So Daniel, thanks for taking some time to discuss the nuclear power industry itself. And I don't believe the uranium industry has really had that flag bearer or spokesman like it has in the past. That's when we had some pretty big personalities in the sector, and they were garnering all the excitement. What is your take on investor perception of this industry?
I think a lot of it comes into three parts, as you would expect. I mean, those are just absolute screaming balls and believe in it totally. But I think you do need to go back to understand the long-term pull on this thing. We have seen for those who've been in it for a long time, you and I, David, have been in it for a very long time. The doldrums of 2011, and you kind of felt, we could recover the industry. There was always that, recovery. But I think it was always about a recovery of our industry, not what we've actually got now, which is a complete and utter resurgence of our industry. I used the word renaissance in the presentation slide. This is back to where we were back in the 70s. We've overcome a lot of the hiccups in this industry where there's a complete realization, particularly by governments, that, you have got to include nuclear energy in this. There are governments that continue to stick with renewables, but you look at where, Germany is always the prime example of how renewables have just not worked, and now their new target is hydrogen, but hydrogen's got to come from somewhere. It doesn't just magically appear in a can, and their focus is renewables. So I think that is the bit that, needs highlighting. I think that's the one thing that the generalists haven't got around yet. We've seen that here in the UK particularly, and I think that's part of fund structuring as well, where the British government is trying to get funds in to help finance Hinkley Point. And green investment still sees solar renewable as the only options, but I think it does increasingly need to be pushed towards, no, it's anything that reduces carbon emissions. And I think that is the communication that needs to be done more to the big retail pension fund investors to realize that it's not, and stop listening to the small minority and start listening. I mean, I think that's the other thing that's changed. I didn't put the slides in there of that one, but the perception polls that have come out have radically changed. And countries where governments are anti, the people are actually positive. I mean, we've got Scotland, small country near us. It's more like a large town. But, government's completely anti-nuclear, but the people voted 60% pro. Germany's another country where the government's anti, but the people polling are pro-nuclear. So I think we are starting to see those changes come through as well.
No, certainly times have changed, and I think there has to be some sort of alignment in some jurisdictions. I do agree that in government policy will sometimes drive perception, but not always. But you look at Ontario. Ontario just announced it's going to build the first reactors in 30 years, which is pretty big news as well. So here's a question here. Noting the regions you're operating in, what level of concern do you have for political and or terrorism risks? Because I know Niger is not free of that terrorism risk. There was an attack on the uranium plant going back maybe 10 years or so.
2013, 10 years ago. Yeah. Let's deal with them both. Zambia, it's had its political things, but I think the new government particularly is so pro mining and pro building. All the feedback. In fact, there was even a letter we saw recently from the Office of the President to the Mine Ministry saying support this uranium project. They want diversification of mineral development. So Zambia, fine. Niger, obviously is the one you point out. I mean, a couple of things. Yes, you've had 2013 was the last, impact back then. That's a long time ago. I actually did a weird stat and looked at it years ago. You're more likely to be kidnapped in Holland than you are in Niger. And you're also more likely to get murdered in the US of A than you are in Niger as well, from a stats point of view. But look, it's a big country. There are risks. You have to recognize those. Niger politically is very Western leaning in every approach that it does. Gets a lot of support, US support, Canadian support, European, UK support, a lot of financial support now going in. And I think that's a key component with the problems you've seen in places like Mali, where you've got a large unemployment and a lot of political risk coming through. That you're not seeing in Niger, that rising up of people in any shape or form. It's very much a country called Niger with lots of different people in it, but they're all Nigerians. We counter it as well by being Nigerian. We've had 100% employment. We were very particular on our feasibility study to make sure a lot of the construction was bid by local construction companies as well, to make sure that you mitigate that part of it as well. And then back to the ESG, you work with the communities. You make sure that the communities are comfortable and happy. And pragmatically, they're a great indicator of what's going on around as well. We found that back in 2013 when we were drilling. We knew something was going on because our drillers were telling us something was going on.
Mm-hmm. Yeah. Now, you mentioned ESG. Nuclear power is again suitable, or let's say is now suitable for a lot of these ESG funds. I'd say particularly in Europe. How is GoviEx? Have you as GoviEx noticed any additional interest from this type of investor?
Not particularly. I think that's because most of your ESG investors are generalists. And tend to focus on, they don't tend to come to mining to start with. If you look at a lot of them, most of the ESG funds go to things that are fairly straightforward, like Microsoft and Apple and Alphabet. I think, in fact, if you look at most of the ESG investing, that's where most of it has gone, which always seems strange to me because I'm not sure they've added up everybody's iPhone and computer and worked how much energy they're consuming around the world, including me while I'm currently doing this call with you. I don't see that, but it is more important, as I said on the call, if you want financing from government financing, particularly, in fact, even commercial financing, you have got to do it now. It's a requirement. I mean, IFC, Equator Principles, has always been part of it. But where you are seeing it increasingly so is that requirement by the utilities themselves to be able to underpin their supply side. We're now starting to see increasing pressure on Scope 1, Scope 2, and down to Scope 3. On emissions as well. It's not gone all the way there yet, but the bigger utilities are starting to have to think about it as well, and therefore are starting to worry about where your ESG requirement positioning is going.
Mm-hmm. Do you find that you need to teach investors, about the industry from maybe the ground up, not just informing them perhaps about supply demand of our industry, but even all the attributes of nuclear power industry and, like you spoke to in your presentation, land use and greenhouse gas emissions or lack thereof?
It's something that we definitely do occasionally. I mean, quite often we end up, down our own rabbit warren staring at ourselves. And I think it is an important thing to come back, which I thought was useful on this one, to come back and just explain why. And I think it also putting that presentation together for me was quite useful because, we always talk about the supply and demand, and we just kind of look at it simply from the WNA or UXC or one of these, and we look at the chart and go, oh, look at this big gap in it that's there. But it was useful for me to actually sit down and understand what was going on with governments and the rationale of why you're seeing these changes come through, and the realization that actually nuclear stands up very robustly in that. And I think that can give investors to our market in general, that comfort is not just about a supply and demand graph. It's not just about, China building a lot of reactors. There is a fundamental shift here, and it is being supported by some real issues that are supporting the demand side.
Mm-hmm. And one of those is really the Russian war in Ukraine. Maybe not on the demand side as much as on the supply side, but I think that's really changed the minds of many investors and uranium end users. Do you think that ultimately we might see a dual uranium price environment emerge? By customers that are willing to buy from Russia and others that aren't?
No, I don't. I think we'll continue to have. I think. The one thing you have to remember about the world now is it is a global world, and the fact that people will no longer buy, and I think the biggest issue is for those that are having to find alternative sources other than Russian material. But that will gradually find its way through. So you saw Urenco announcing an expansion of its enrichment this week. You're seeing Convidine trying to expand up on its conversion. People are trying to fill those gaps. You're getting a pricing structure, but that price is already in that market. They're using that opportunity to do that. Uranium that was being produced out of Kazakhstan that was struggling to get it out into the global market is just going to China, where the Chinese are just not buying it from somewhere else that they would have gone to. But even the Chinese are looking at it, and when we talk to CNNC or CGN and the buyers from there, they're going like, we don't like buying everything from one producer either. If something happens to that rail link or whatever, then we're stuck. We have to get diversification of supply as well. And so I think, that's been really good, going to be really good for Africa, because it is the one place that everybody can go and buy from, import from, export from, etc. So, yeah. Yeah. Okay. Yeah. Let's talk a little bit about that. You are interested in moving your assets forward during this cycle. I think it was mentioned, and that will likely depend on uranium prices and offtake. Yep.
So, do you find that having such excessive resources, 220 million pounds, that nuclear power companies are really eager to approach you for potential offtakes?
At the end of the day, they're commercial. Look, you got to justify to them that what you're going to produce is going to be commercial and that you can do it. And so, it's a bit like, you're the dating process. You don't just rush in the door on the first one. We've been doing this now since I appointed Chris Lewis, last year. And, it's getting them to understand who you are, what the risks are associated with our project, how we can deliver what we've said we were going to deliver. And now we're getting down to the heavy petting bit, which is, can we start talking about some price? And that's the stages you've got to go through. You don't just rush in the door and say, hey, dude, I've got some uranium. Do you want to buy it? They have to know that if they're going to contract with you for this material, that you're going to be there. Having the pounds is very positive, though. You're not a short life project. You're not going to be in and out for 6 years. I think that's the one thing that we have seen as well, change in the market, is that utilities are now starting to cut longer time frame contracts. A lot of the utilities were before, 1, 2, 3 years, maybe, they didn't feel the need to be any more than that. You're now seeing much longer contracts, guys coming out for 6, 7, even up to 10-year contracts are starting to appear in the market. So having a long life asset is a real positive for us as well, that if you contract with us and we carry on, we produce for at least 20 years and probably a lot longer than that once we get Madawyla up and running.
Yeah. Now, contract details rarely are fully disclosed out in the markets. Do you find that these utilities are sharing with you what they expect, to be paying, or how long they want to pay, or what sort of information are they sharing with you?
Look, they're pretty close shop on themselves. Some of them are very good, and they will give you guidance when there's an RFP come out and bids have come in. They will tell you roughly where you were positioned, what could have been better, what could have been worse. You get guidance. At the end of the day, they're competitive on price, and a lot of them have to be, whether they're in a regulated or a deregulated market scenario. But on the other side of it, you start to get a feel from the ones that have different preferences of the way they'd like to bid on their contracts, how they would like to handle inflation, where they sit with regarding the collars on contracts, spot market, these kinds. The one thing we have seen is, a large move away from the utilities, particularly North America, away from the spot market. There are companies out there that used to only do spot market trading and have now pretty well do everything under RFP. So that has changed a lot out there. It is contracting. And while contracts, are pretty well confidential between the parties, that, you're talking about, the details on the numbers rather than the overall structures. They're all generally looking at some kind of pricing structure, whether it's collared, and, Grant Isaacs has been very open about his contracts at the moment. He's been looking at collared contracts between 55 and 75, or 80. So, you can tell where he's trying to hit the sweet spot, because your floor is always going to be below where you want it, and the collar's where you think it could get to, and you don't. If it goes any higher, well, fine. If you're making $75, you'll be happy. But a lot of them are fixed contracts out there that are sitting there, inflator built into them. How you get to that inflator, most of them are using things like Moody's for their forecasting on inflator. So, they're generally fitting under a fairly small box of, ideas.
Mm-hmm. How far in advance does a nuclear utility want to contract its material? Somebody said specifically, if an SMR, small modular reactor, decides to come on stream in, say, 2035, when would it be going out and securing its fuel?
Well, if you use the big reactors as an example, it's the easiest one. I mean, you're looking to get your EUP about 6 months before you need to do a fuel loading. You're looking to get your conversion 12 months before you need to convert it into EUP to get it into your fuel load. And if you want to have uranium, it's generally 2 years. You want to know you've secured your uranium 2 years, because you're going to have to get it in for conversion. It's got to be converted. It's within that 1 year to get it through to the next stage. So, it's not a straightforward, I can just whip down the shop on the spot market and just pop it in there. It has to go through its various stages. In some cases, it's got to move from jurisdiction to jurisdiction to go through those changes, and hence those timeframes. So utilities tend to work backwards. They start with, when do I need to load the fuel, and then work backwards to when they actually need the fuel, the primary U3O8 to turn up. And, there are utilities out there, and I'm sure the SMRs are going to be totally the way this is going to start with them on the HALEU particularly, who actually just contract the EUP straight off. Right. And that's what they're going to require. And it'll be up to the enricher to then figure out how he's going to provide that EUP.
Mm-hmm. Okay. Moving on to Meduela, this is your flagship uranium development project in Niger. Might there be any synergies with existing operations in the region? Perhaps you being able to take advantage of infrastructure already in place, something like that.
Well, I mean, we effectively do that anyway by being where we are. We're lucky that there's a big power line that goes all the way down to the front door in Arlet, which is what Cominac and Somalia take their power from, or Cominac used to. So, we're able to bring that power back. By having 200,000 people living there with good educations from the mining industry, that synergy is there as well. The existing transport routes in and out are well understood. I mean, Orano have an independent transport business as well within their group, who have been doing this since the 1970s. So there are a lot of synergies here. Are there synergies directly with my peers? I mean, obviously, Somalia is coming towards the end of its life. Global Atomic are obviously getting up and going, but they're 140 kilometers south of me. I can see potentially there are synergies longer term on procurement issues, those kind of things where, head office type synergies could be doable, but operational synergies, no, we're too far apart.
Uh-huh. Okay. And, you talked about the feasibility study as well. Shipping costs have fallen. Are there any other potential new procedures or technologies you might be able to put in place to help improve economics further?
We put new technology into the thing already. As you know, we put that Vero milling in to start with. We put continuous IX rather than batch IX into our system. So we have put a reasonable amount in. At the moment, the focus is on just getting this one to where it is. I don't want to keep changing the story too much either on the project. We've pinned it down as a feasibility study. We can re-look at it for Matanga particularly. And I think when we go from open pit to underground, there's some options there as well for us to go back and, using the cash flows to re-look at some of the technologies that are available or new technologies that maybe make the underground better coming into the plant. And change the way that happens as well. So I think for the open pit portion, we'll leave it very much it is. And look, as we can already see that there are benefits out there from when we bid this thing back in May of last year, which is pretty well a peak of the inflation cycle. And a lot of stuff has come down since then.
Yeah. So those unit operating costs around $29 a pound, do you think you might be able to squeeze those a little bit just based on shipping costs?
Yeah, I think so. And I think even on the capital costs, we had every bit of kit quoted delivered to site by every supplier. So all of our quotes were quoted delivered to site at that time. So I think there's some synergies there. Until we actually get the final quotes and see what they all look at, it's kind of a bit of hoping that it all plays through. But yeah, I certainly can see, particularly on things like on shipping and some of the consumable costs in there, things like sulfur have gone back down as well with, increased diesel back into the market, etc. So, there are some, and that's a big consumable for us on this project.
Great. Okay. Moving over to your Montanga project, it's been suggested that this project might be a couple years behind Meduela in development. What's the next big catalyst we're expecting from Montanga?
Next big catalyst is going to be the FS next year. I mean, we will be putting out the MRE. I'm just trying to get the final number off the guys and get them to put all the bits that they need to do. And when we put out the MRE, we'll have to do a 43-101 for it as well. So that's trying a bit of a delay because of that. Because it's a new resource statement under the rules now, you have to do that. So that's in process. So that'll be coming very soon. And then really, we can give some updates on the metallurgy as we go through. The met test work is ongoing at the moment. No big surprises coming out of that. Continues to show it's a low acid consumer. But we've got additional deposits like the Dibwe East deposit was not really tested before, so that's now in there as well. So, yeah, this is just a plow on through feasibility study. But, I think you're going to, and then, we have to do the ESIA and RAP. We're updating the ESIA because it's, time has changed. The relocation action plan is going really well from discussions with the community. We have a very supportive community there, and again, back to your ESG, it's like, guys, we would like to employ the people who are moving and they're actually living on top of the deposit. And if we have to move people, then we'd like them to be the one that get the jobs, which is why we announced that adult education program. 70% of our population has no English education above grade 4. Right. So you have to deal with that. But that's a benefit. It's a double-edged sword. Yeah, it's not expensive to do it, the training. But what it does mean is you have a community that's committed to the project as well. It's theirs. They own it. And that's a positive thing, the support you need to get mines built and run long term.
Mm-hmm. Okay. So the resource estimate is pending, met testing, permitting, and you said feasibility next year or
feasibility study. We're going straight to feasibility study. This one's been to pre-feasibility study before. If you remember, the previous owners, both Dennis and Africa Energy, took it there. So we're now jumping over it and getting to the final.
Mm-hmm. Yeah. What do you think it would take to get both of these projects, Meduela and Montanga, into production? You say you want them this cycle. This cycle is here, perhaps. We were sort of hovering around $50-$55 a pound. What do you need to get them into production, and how long might that take?
You mean other than just money? Yes. I mean, obviously, in the case of Meduela, where it is now, which is really just to get that debt package lined up first. Once we get the LOIs, then we go into the due diligence stage. while we're running that due diligence and negotiating contracts on the debt, we'll be working on the offtakes. As we come to that end position on all of those, that's the point we come in and look for the equity when it's very clear the debt's going to be there and the offtakes are lining up as well. We secure, and then it's a 2-year build. It's a very quick build on that project. It hits uranium very fast. And Matanga will pretty well follow a very similar pipeline. I mean, the difference will be by then we'll actually have cash flow coming out of Madahuela. Obviously, some of that cash flow is going to be focused on repaying the debt, but there will be additional cash flow, hopefully, that can be used towards supporting Matanga's development as well. Again, following that same route. And, and for us, that's a real benefit having 2 projects, because when we talk to the utilities, yes, we'll commit initially for taking our offtake from Madahuela, but going forward, guys, we've got different projects. If one has an issue, the other one we can provide from. You're not restricted. We can provide uranium from either project, and both of them can carry on for quite a long time.
Yeah, and one of those different projects is also the Falea project in Mali, which seems to have fallen back into your lap. Do you have any plans to fund exploration there this year yourself, or does the plan remain to vend that project out, get other people's money to work?
We had to get a reissuance on the Falea license, if you remember. So the focus is in doing that first. Once that is out of the way, then we'll reconsider what we're going to do with it. We looked at disposal quite simply because we have 2 really advanced projects that take a lot of management time up, and Falea was taking time off and funding use. I'd rather use the funding on Madahuela and Matanga. So prefer to find a new home for it, but we'll see where the market is, etc.
Yeah, you mentioned management time, but how about cash as well? How much cash do you have in your treasury, and sort of what's your global budgets for exploration or development?
Well, I mean, at the moment, we raised that money earlier in the year, 15 Canadian. That's good for, predominance of this year and probably into next year. We'll see how we try and keep the balance tight as we can all the way along. And on that I don't know if you saw that UXC report, David, that came out that did an analysis of 2019 to 2023 funds raised by uranium companies. GoviEx was at the bottom of that list for the developers, and we raised for 3 projects. I mean, we're very efficient on the funding that we raise and use, and we've run 3 different projects with a lot less money than everybody else has been using, including our African peers out there as well. Main focus this year on funding is Matanga. That is taking up most of the cash because it's drilling and feasibility study. The potential to spend money will really then focus very much on the debt side of Madahuela, but it will be discretionary on the basis if all of a sudden I'm sitting with a debt package coming imminently down the line, then obviously I'm going to want to ramp up my cash burn out of Madahuela. But it's because we're getting very close to the construction phase. So, at the moment, Madahuela is very discretionary. Keep the cost down on that one. We focus on the debt. Matanga is really where the focus is at the moment on cash burn.
Mm-hmm. Are you seeing interest on the debt side? Are you dealing with, let's say, ESG funds or even credit export agencies?
Export credit agencies. We've got a number. As I said, we've got a number of LOIs from a couple of commercial banks, but the main support's coming from export credit agencies, either as direct lenders or as insurers, which are quite important. And then the DFIs have been quite supportive as well. Coming through. So as I said, we're kind of almost there to something I'd like to. I don't want to announce something and confirm where we are until I know we've got the whole package kind of rounded off at an initial LOI stage, because otherwise I'm falling short. But we're getting there slowly. Right. But as you saw from Global Atomics last press release, this stuff takes time. The one good thing I will say though for having export credit agencies and DFIs in, it's very sticky money that when they make a decision, it takes them a while to make a decision, but when they make that decision, they don't go away. It takes them so long to get there that they really aren't going to change their mind. Whereas commercial banks, it's not as sticky. You can get commercial banks and they'll change their mind at the 11th hour. Whereas export credit agencies and DFIs do not. They take the time to think about it. politically, commercially, and then once they've agreed, they're pretty well in the game for the long run.
Right. Okay. I guess to wrap it up, and another question here, what accounted for the share price appreciation back in 2021, and when or might we see that situation arise again?
Well, we started to see the beginning of the uranium price, and the share price, bounced with the whole market at that time. And I don't think, when you look what we have achieved, and I come back to the amount of money we were raised to do this, we have taken projects through feasibility study, permitted, we're putting another feasibility study. We've cleared all the debt off our balance sheets as well and got ourselves to here. This discount and continued trend that we've got is just completely, I can't figure out why it is there, because we're delivering on all of the physical aspects of our business to go through. We're getting support from our stakeholders. We're doing all the stuff on the ground that needs to be done. When we talk about ESG, it's not just about community. It's about getting your health and safety systems ready. You're going from being a geology company and explorer to suddenly having to have health and safety systems ready to build a mine. All that takes time. Has got to be effort and done. That we continue to do. And these projects are robust projects, as we're showing now. We went out, over the feasibility study. I said, ignore the NPVIR. It doesn't value our project. I mean, this is something Robert Friedland said with his own project. Admittedly, Kamoa is a lot bigger than Madajuela, but, the same principle applies. If you look at most of the projects that you cover as an analyst, they're under 8 years. They're short projects. And particularly some of those big Athabasca projects, they're under 10 years of mine life. So they're capturing everything. You don't capture half the value at Madajuela. And I don't think people see that. And that ability to keep this project going long term there as well. So there, the fact that, we got 20 different lending groups in the first stage want to be there. This is an unconventional commodity in an unconventional jurisdiction. We're sitting there with good support coming through already, waiting to get to the end. I think that hopefully when we can make that announcement will be a real highlight of really what the world thinks about Madajuela and shows that it is a real project that can be financed.
Mm-hmm. Great. Okay. Well, Daniel from GoviEx Uranium, thank you for joining us again today.
Absolute pleasure. Thank you, David. Appreciate it.
Thank you, everybody else, for tuning in. And Red Cloud Securities will be back tomorrow afternoon. That's Wednesday. Taylor's going to sit down with BlackRock Silver, July 12th at 2 p.m. Eastern. So have a great day, everyone. Thank you very much.